Marisa Scura here at Century 21 Charles Smith Agency, and I'm joined with Michael Levine from Bluerock Mortgage. And we're here today to talk about appraisals. Thank you so much, Michael, for joining me.
Thanks, Marissa, for having me.
So we're talking appraisals today and how important they are for home buyers.
Right.
So take it away.
Well, appraisals are often very misunderstood by buyers.
Right.
So I'm going to try to clarify what an appraisal is. No matter how strong a borrower is financially, the bank has to lend money based on the strength of the borrower, but also the value of the home. The bank doesn't want to lend more than the value of the home because the bank uses the home as collateral for the loan. Otherwise, they wouldn't be willing to lend the hundreds of thousands of dollars that they do. So the main purpose is for the appraiser to give the bank an accurate value of the home and how much it could be marketed for.
That makes sense. I'm often asked what the difference between an appraiser and an inspector is. I know the difference, but I was wondering if you can give us a good explanation.
Sure. A home inspector's job is to go to the house and make sure that the house is working functionally and to point out anything that might need repair or replacement and anything the buyer needs to know before stepping into the house. The inspector does not look to put a value on the home. That's the job of the appraiser. The appraiser isn't going around checking faucets and plumbing and appliances. What the appraiser is doing is the appraiser is looking for the square footage of the house, looking for the number of bedrooms, bathrooms, whether there's a basement, whether it's finished, whether the house has a deck, a patio, a garage, etc., how old the house is, what the taxes are, and uses all that information to come up with a value for the home. Now, no home stands alone, so the way that the appraiser figures out the value of the home is they're looking for what are called comparables. And what a comparable is, it's a home that has sold recently in the vicinity of the home that's being purchased. It usually should be within a mile and within 6 months, having been sold within 6 months, and be similar in style. That is, a colonial for a colonial and a ranch for a ranch. And what the appraiser does is they look at those homes. If there are any differences between them, they will make adjustments, and in a very structured way, they go ahead and they give an opinion of value.
And so, what would happen if a home underappraises?
Fortunately, that doesn't happen very often, but it occasionally does. And if a home underappraises, it doesn't necessarily mean that the deal is dead. There are some options to keep the deal alive, which most of the time, most people want to happen.
Right.
So the first thing that can be done is you can go back and you can try to negotiate the seller down in price by showing the appraisal and convincing the seller that this is an objective appraisal and that maybe we can come to terms still. That's one option. Another option would be that the buyer can come in with more money to the closing to make up the difference between the appraised value and the purchase price. That does happen a lot in this situation. Another thing that we can do is the buyer can just bring in a lower percentage of the purchase price to closing, and the same amount they were going to bring in, but a lower percentage price. And what that sometimes does is that might end up in a higher rate or taking on mortgage insurance, something the buyer may not want to do, but a loan officer can figure out what those numbers are and see whether that's acceptable to them. And the last option possibly is if we feel that there's a comparable that was missed that could affect the value of the home. Usually the realtor would be the one to point that out. How come they didn't use this house that sold down the street a few months ago? We can present that to the appraiser and see if they'll reconsider using that appraisal, or at least explain to us why they didn't use that as a comparable, and hopefully that can adjust the value upwards. Between all those options, we usually make the deals work.
Oh, that's great. Thank you so much, Michael, for all this great information. And I'm Marisa Scura with Century 21 Charles Smith Agency. Again, this is Michael Levine from Bluerock Mortgage. We're here to answer any and all of your questions. Give us a call today. Thanks so much and have a great day.
Thank you.
Bye.